people. We will get started here in a moment. Thank you, everyone, for joining us today. Myself, I am Alex Perny, along with my colleague, Clay Malcom. If anyone would like a copy of the slides today, feel free to grab them right here. They are attached as a PDF as a handout, so feel free to take them. If you don't get them by the end of it, or if you would like some more questions answered, you can always reach out to Clay or myself directly, and we can certainly help you out with any questions that you might have. This is probably going to be a touch shorter than our normal hour-long presentations, so we will have plenty of time for questions and answers. If you have any questions throughout the presentation, feel free to type those questions into the chat box. All of your audio has been muted on your end, so please do make sure that you do type those in if you do have any questions. With that said, we can go ahead and get started. All right, my name is Alex Perny. Again, I've been with Advanta here since 2012. My colleague Clay in our Atlanta office is a many-year veteran of self-directed IRAs throughout the industry, a great resource. And if you have any questions specifically for either of us, you can reach us directly at the contact information provided. Now, before we get started, we do need to read off a bit of a disclaimer. Oh, what happened? There we go. Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any investment products. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. Now, with that said, today we're going to be covering some of, keeps doing that, sorry about that. We're going to be covering some of the basics with regard to cryptocurrency investing. This is by no means a comprehensive deep dive into everything cryptocurrency, but it will give you enough to kind of get started and formulate some of your questions going forward to get into some of those more specific things that you might be wondering about, and also kind of give you a good general overview. I'm going to be starting today, and then I'm going to hand it off to my colleague Clay, but I wanted to kind of go through some of the general terms that you might hear if you are just getting into cryptocurrency, or if this is all new to you, especially if you are not someone who has been steeped in this and you just need to kind of understand what some of these things are, because there is differences between some of these. Some of these terms can cover more of a ubiquitous nature of what they mean in the general aspects of cryptocurrency, and some are a little bit more specific. So most people have heard of Bitcoin. Now, Bitcoin is a specific type of cryptocurrency. It was one of the founding and by far the most adopted cryptocurrencies on the general market today. It was started as a project back in 2008 and has since ballooned to be the single largest market share of all cryptocurrency. Now, not all cryptocurrencies are Bitcoin, but Bitcoin is a cryptocurrency. So sometimes you might hear people refer to Bitcoin, but they are maybe more specifically referring to another type of coin or token. So just keep that in mind, is that if you're talking about investing into Bitcoin, there are many different options out there and many different ways to do it, but the inherent reference of cryptocurrency as Bitcoin is a little bit general. So just understand that Bitcoin is a specific type of cryptocurrency, and other cryptocurrencies aren't necessarily just an offshoot of Bitcoin to that effect. Now, you're going to hear people talk about blockchains. Now, blockchains are the public ledgers of all transactions relating to a specific type of cryptocurrency. Now, there are some exceptions, but for the most general purpose, a blockchain is going to be where you can view every single transaction that has happened with a particular type of cryptocurrency. So using Bitcoin, for example, you're going to be able to see which address has sent a specific amount of cryptocurrency to another address. Now, this is going to help with the verification process of ensuring that there is no double spending of cryptocurrencies, that someone cannot just inject cryptocurrencies onto a market. Every single transaction that happens with a particular cryptocurrency, for the most part, and I'm using Bitcoin as an example, is publicly viewable and verifiable. Now, this goes also into some aspects of what mining is, and we'll get to that in a minute. But understand that when someone refers to blockchain, it is specific to the actual ledger, the public ledger of the transactional nature of the particular cryptocurrency that you are investing in. Now, further down from that, blockchain is kind of a a general term that is used for the technology surrounding cryptocurrencies. Now, specific to the blockchain of verification of transactions to a specific type of cryptocurrency, this technology is also being extrapolated to many other different fields, such as payment processing, things like ticket vendors for concerts and things like that are utilizing blockchain technologies in other aspects of commerce. So just understand that if you're looking specifically to cryptocurrency, someone refers to the blockchain of a particular crypto, that is kind of the public ledger. But blockchain in and of itself can be a more generalized term as well. So just understand that depending on the aspect of where you're looking at this, blockchain can have a few different meanings. Now, other people like to refer to cryptocurrencies as tokens. Now, this might be a little bit better of a descriptor of what you're actually investing in, rather than just referring to, investing in Bitcoins if you're not investing in Bitcoin or any other type of crypto. Tokens refer to the actual specific unit of cryptocurrency that you are purchasing. Think about a token kind of like a dollar. You can have multiple different individual dollars. Those are your tokens of the actual currency. And in this case, look at it as the United States dollar. I have, let's say, a wallet with $100 in it. Then I have 100 tokens of a particular cryptocurrency is how that would kind of equate. Now, obviously, token can be applied to any different cryptocurrency, and a token of a whole token of one cryptocurrency can be wholly valued completely different from another one. So understanding that when someone refers to a token, they're kind of referring to the actual unitized basis of the particular cryptocurrency that they're investing in. So if I owned one Bitcoin, I owned one token of Bitcoin. If I owned 15 Ethereum or 500,000 Doja coins, that's kind of in reference. You can use that vocabulary to refer to those as tokens as well. Now, you also hear people talking about addresses. Now, these are not, your home address along with a zip code or anything else like that, but the fundamental theory of that kind of holds true. People are familiar with the concept of an address. It is the definition of a location for something specific to be sent. Now, in the case of, let's say, what your home address is, it's mail. You send something in the mail to someone utilizing their address. Same kind of thing works with email. You have someone's email address, you send them something. In this case, it's an email. Now, with a cryptocurrency address, this is going to be referencing the location of your specific wallet. Now, you're going to have two different addresses, a public and a private address for your wallet. The public-facing one is what is available for anyone to view on that particular blockchain. So that is what you give someone if you want to say, hey, send me some cryptocurrency, or if you are on a particular exchange platform and you want to pull your cryptocurrency out to a specific wallet, you're going to be using your public address for that. So keep in mind that you are going to have essentially two different types of that. One is a public one. Obviously, you can provide that to anyone. It doesn't let people extract things from you. It's kind of like your home address. If you're telling someone to send you something, or if you want to send something out, you need to have that verification. So the addresses work in conjunction with the actual blockchain to, one, show who is being sent from, and two, and additionally, for you to be able to move your cryptocurrencies around, you're going to have a specific address. Now, these addresses are going to be specific to the type of blockchain and cryptocurrency that you're using. So keep in mind that you might need to record keep a few different ones depending on how many varieties of cryptocurrencies you're investing in. Now, I see someone is raised their hand. If you do have any questions, please make sure that you do type those into the chat box. More than happy to dive into a specific question if you have one. Again, we do have plenty of time here for Q&A, so fire away with those questions. Now, going back over to the other part of this slide, we have exchanges. Now, just like with any type of asset, there has to be some type of supply and demand. Now, an exchange platform provides that specific marketplace for that to happen. So think of securities trading. You have the New York Stock Exchange. If you have one share of Apple stock, you can't very well just go to your neighbor and sell it if you wanted to. I mean, they may want to buy it, but that's not typically how you trade securities, and a lot of cryptocurrency is kind of built on those same premises. So an exchange is a marketplace that you can use to readily buy, sell, and trade different types of cryptocurrencies. So take, for example, someone like Coinbase. It's a very popular one. It's not necessarily always the best for investors because their fees are kind of high, but if you wanted to buy, let's say, Bitcoin and Ethereum, that is a place you can go to do it. You create an account, you go on there, you exchange your fiat currency for a cryptocurrency, in this case, Bitcoin and Ethereum. So the exchanges allow you to actually change one type of currency into another, and then you can also trade in the actual cryptocurrencies themselves as a like-kind exchange as well. So the exchanges are marketplaces for you to actually purchase and sell cryptocurrency. Okay, so we have a question. I think we kind of got to that term. I already have cryptocurrency. How do I move these from my online wallet to an IRA account? Great question. So if you personally own cryptocurrency, you cannot utilize that as a way to fund an IRA. You have to use IRA dollars, so United States dollars, to purchase a cryptocurrency. Now, although currency is in the name of crypto, for United States tax code, it's still considered a personally taxable asset. It is not something that you can use as far as a contribution to an IRA. So you can't take an equivalent cash value of cryptocurrency and contribute it to an IRA account. You have to take US dollars from your current IRA and then purchase cryptocurrency with it. That's just kind of, something that we are, the situation that we're in. There is no ability to do a like-kind contribution, is essentially what you're asking, of a particular type of asset into an IRA. So thank you very much for asking that question. I'm sure that probably would help some other people out as well. Now, when it comes to actually holding cryptocurrency, obviously this is not something that you just, put in your hands or a vault. It is, very much more decentralized in nature. So if you have something, how do you protect that? Well, you utilize what are called wallets, and there are many different kinds of wallets out there. But this is not a wallet in the traditional sense of a billfold that you put in your pants pocket. A wallet is a device or service. It can be either, so it doesn't necessarily have to be something physical. It can be a service provided by a provider that allows you to store and safekeep your cryptographic keys for your cryptocurrency, essentially being able to secure the coding for your specific cryptos. Now, just as there are different levels of security for safes, there are definitely different levels of security for wallets. Now, wallets can come in a few different flavors. They're typically either referred to as hot, online cold, or offline cold. So a hot wallet would be that if you have an exchange account and you've purchased some cryptocurrency utilizing Coinbase as my example here. If you have purchased cryptocurrency and you are just leaving it on Coinbase, then that would be what's referred to as an online hot wallet, meaning you log into your Coinbase account, you can immediately buy, sell, and trade. It is ready to go right there. Now, from there, you have an online cold wallet, meaning that you have a digital interface with another company where you move your cryptocurrency to another wallet that you have with a service provider. Now, this wallet, typically, they will have some type of storage solution on their end with regard to how their servers are maintained and the security aspects of that. Sometimes they'll even use air-gapped servers to be able to provide extra layers of security for your cryptocurrency held in your wallets at that service provider. But keep in mind, you still are entrusting it to a third-party service provider in that regard. Now, an offline cold storage wallet is probably the gold standard of security. It is a little bit more cumbersome, and you do have to have a piece of physical hardware. But in this case, utilizing something like the Ledger Nano S is a key fob-looking USB plugin that you are able to store the cryptographic keys for your currencies on a piece of hardware, completely offline, not connected to the internet. Again, very secure, but just a little bit more involved than maybe having it as a hot wallet. So remember, when someone talks about their wallet for their cryptocurrency, it's either going to be a hot, an online cold, or an offline cold wallet. So there's a few different flavors depending on what you'd like to do or how you'd like to hold it. There's going to be an option there for you as well. Now, mining is another big type of reference that you're going to hear in cryptocurrency. Now, mining in the traditional sense of, someone with a pickaxe trying to find diamonds or coal or anything else, doesn't necessarily apply here. What mining refers to is a few different aspects of what we covered on this slide. It is utilizing the blockchain to verify the transactions, and this is true for most different types of cryptocurrencies, is that if you use the compute power of your computers, and then this is where you hear about mining farms as well, you use the compute power of a particular computer to verify the transactions on a particular blockchain called hashing. Thereby, the reward for doing that and verifying all of the transactions is newly issued cryptocurrency. Now, all cryptocurrencies have different reward structures for how they reward people for doing mining on their blockchain. That's extremely complicated, but just understand that if you are utilizing your computing power to help verify transactions on a blockchain, you can earn cryptocurrency for doing that. Now, for something as popular as Bitcoin, obviously that sounds, very attractive, but the amount of computing power to verify all transactions on a particular blockchain ledger, we're talking about server farms on an industrial grade scale that are using thousands of kilowatt hours of power to verify these transactions. So it's not something that, realistically with something as popular as Bitcoin, you're going to take care of just with your laptop, but there is certainly options out there, but it's important to understand what mining is. And then the last one, sometimes people with regard to talking about cryptocurrency might throw around the term ATH or all-time high. With the volatility of cryptocurrencies, there is a lot of there's a lot of people trying to trade on arbitrage or different types of small margins of different price points. So people referring to all-time high, it's just kind of a simplified way of talking about buying high buying low, selling high, and the most general context of what most people think of when they talk about trading of any type of asset. So that's kind of the general terms that I'd like to go over with you. I'm going to turn it over to my colleague, Clay Malcom. He's going to take you through some of the different aspects of investing in cryptocurrency, some of the different structures, and then I'm going to come back at the end and we're going to talk about some of the tax benefits of doing this specifically through an IRA. So Clay, it's all yours.
Thanks, Alex. Hi, everybody. Yeah, my task in this webinar today is going to be basically to kind of talk about how an investor, an IRA investor, actually accomplishes getting cryptocurrency in their IRA, what decisions they make, where those decisions lie, et cetera, et cetera. I'm happy to also kind of take questions as you go. So if you do have questions, just go ahead and type them in the questions box, and we'll try to take those as they come. And I'll say this. So I'm a cryptocurrency investor both inside and outside my IRA. So I have enough knowledge to be at least a little bit experienced and have some empathy for the procedure. And one of the things that I'll say that I've found, in my experience, is that what Alex was just covering is really a tough part of the equation, which is the vocabulary. It's not necessarily completely established. Everybody's not always talking about the same thing when they're using the same term. So it really is one of those things where I think the process of having your IRA or your tax advantaged account invest in cryptocurrency takes a little bit of patience and a little bit of investigation sometimes when you hear somebody talk about a particular procedure. So I will try to make that as simple as I can, and here we go. So first thing to understand is that the rules for the account type are still going to apply. So self-directed IRAs are in and of themselves, IRAs that can purchase alternative assets That's a little bit new to some people, and so the idea really is that the account type stays the same. It's a traditional IRA, it's a Roth IRA, it's perhaps an HSA, health savings account. We also handle SEP IRAs and solo 401ks and a couple of other account types as well. But the account type stays the same. So contribution rules, distribution rules, and the tax advantages are exactly the same as you already know and associate with those account types. The thing that's different here, obviously, is that instead of that traditional IRA or your HSA, or in a lot of cases for cryptocurrency, Roth IRA, instead of it buying a stock or a mutual fund, it's going to buy a cryptocurrency in hopes that that cryptocurrency will go up in value and grow the account. So first step in any of these processes, and we alluded to this on the question that was previously asked, is you do have to have an IRA. It does have to be funded, and then it has to go out and buy the cryptocurrency. Now, there may come a day when cryptocurrency is allowable in terms of making contributions to an IRA, but that day has not come yet. All contributions to IRAs and HSAs are in cash, and in this case, fiat currency, the US dollar. So you have to open an account. The account has to be open at a custodian that handles cryptocurrency. And what I will tell you about that is that all self-directed IRA custodians handle the way that they approach cryptocurrency differently. And there's a variety of reasons, and we'll touch on those as we go through the presentation. But it's not apples to apples. So when you are evaluating a IRA custodian, and you're evaluating against what you want to accomplish in terms of investment with cryptocurrency, make sure that the custodian can actually do what it is that you want to do from a cryptocurrency investing standpoint. Okay, so you have your IRA, it's at a self-directed IRA custodian. Then we're talking about choosing the cryptocurrency, right? So there's hundreds, if not thousands of them at this point. And they are available as assets for your IRA. But the thing about that is that really exchanges, or those platforms where you transform essentially your fiat currency, your US dollars, into cryptocurrency and then trade from there, those exchanges set their own policies on which cryptocurrencies they handle, and they get to choose which ones that they handle. So again, in terms of evaluating what exchange you're going to need in order to accomplish your cryptocurrency investment strategy, this is a question or an investigation that you would do when it comes to exchanges, or however it is that you are going to, again, transform the US dollars into cryptocurrencies. So as we mentioned before, your IRA, Roth IRA, HSA, any of those account types, it's going to start with some amount of fiat currency, US dollars. They're going to need to be taken in by an exchange or transformed by an exchange from that into a certain amount of cryptocurrencies, whatever it is that you instruct to have happen. So choosing the exchange is very much like choosing an IRA custodian, in as much as you want to choose an exchange that, again, can accomplish the goals that you have for your investment strategy. One of the things that is also important when you're choosing an exchange or a method of IRA, or a combination of an IRA custodian and an exchange, is your desired strategy. Are you going to be trading a lot, or is it going to be buy and hold? And there are a number of factors that go into how that would affect your decision. But one of the things that you want to keep in mind is that those options, buy and hold and actively trading, they tend to have some indication. The strategy, or the pieces that you would put together for each of those two, might be a little bit different. So you may want to think about what strategy it is you want to use. That doesn't mean that you can't change it in the future, but understanding what it is that you're trying to accomplish with these other entities. And the other entities, so there's you as the account holder, there's your IRA custodian, there's your exchange. These other entities are all cooperating with you in order to try to, again, accomplish your investment strategy. So having the ability to say, or to indicate what it is that you want to accomplish is pretty helpful. Alex talked about the storage configurations, and I also think that these are very multifaceted. It's remarkable, and having started going to cryptocurrency conventions and meetings and things like that probably 5 or 6 years ago, I can tell you that storage is changing, regulation and legislation is changing, security concerns are changing. This is a relatively new marketplace and asset class, and so it moves a little bit faster than some of the other asset classes that are more established. So do understand that there are new things that have to occur, or that are occurring in terms of the marketplace or the industry adjusting to what both consumers want, and consumer protection and legislation and all those things. And storage is one of those. And I'll say this, that storage, typically you're thinking about the safety of your cryptocurrency, you're thinking about the access, you're thinking about how much you're being charged for it. And in the case of the IRA custodian or the IRA provider, we are thinking about, hey, we have as a custodian, we have a responsibility to have custody. It's part of the reason that we have that the word is custodian of the IRA owned assets. So we are very interested in the storage method that you choose as well in most cases, because that's part of our role as an IRA provider that keeps the tax benefits for your account intact, so it keeps the account in good standing. So storage is important. And then liquidation and distribution strategy, those are a little bit different things, but I do want to just indicate the fact that, and we'll talk about this more in a moment, but the different exchanges have different methods for trading, and also trading back to fiat currency. And ultimately IRAs in the initial conception are saving for the future, right? But the future means that you will essentially distribute those assets for your benefit, so that you get to use that money at some point. So I think that anybody who's considering any type of investment for their IRA should be thinking about, or could be thinking about, what's my ultimate goal? What's my distribution strategy? And again, that's not to say that it wouldn't change because circumstances change, but having some idea of, okay, well, I'm going to want to put myself on a distribution schedule of $10,000 a year at some point, or this or that or the other thing. So do recognize that the account itself is set up in such a way that you're thinking about the end result, which is the distributions. And because of the way that this combination of IRA custodians and exchanges is set up, knowing what the logistics are of that can make a difference. So that's going to be our game plan as we move through. Okay, so I mentioned the fact that a custodian does need to maintain control, and at Advanta IRA, we have had a number of discussions about how it is that we would be able to fulfill our role as a custodian and have control of the IRA-owned assets, and still allow people to have some flexibility in terms of what they want to do. And so at this point, that has boiled itself down to two strategies, which I'm going to talk about in a moment. So in one strategy, the IRA has a direct relationship with an exchange, and in the other, there's an LLC, typically called checkbook control, that's inserted into the middle, and that allows for a certain amount of agility and flexibility. So I'll get into those in a minute. But as you're trying to understand how the relationship between the exchange and you as the account holder and we as the IRA provider are all constructed, do understand that the mandate is that we have control of your IRA-owned assets. Now, in the case of real estate, that basically means that the title is in the name of the IRA, and we are the signer for your IRA. So from a legal perspective, we're actually the person who controls that property. Now, you as the account holder make all the decisions. We give that freely to you because you are the strategy maker for your IRA. But at the end of the day, as the signer for that property, you wouldn't be able to go in and personally sign all the documents that are necessary to sell that property. We would need to sign them, right? So that's how we accomplish our custody of real estate. When it comes to precious metals, so if your IRA owns physical gold, we have you put it in a depository, but the account at the depository is actually in the name of your IRA, not you personally. And so for that gold to be distributed to you in kind, let's say, or to be sent to a dealer who's going to then give you cash for it, those things need our signature and our okay for that to physically happen. So that, again, that constitutes our custody of that asset. So all of these things are endemic into any of the investments that you have. Now, cryptocurrency is a tougher one because it's so accessible. So at this point, we do not have a strategy where we will do cold storage on a wallet or keys for anybody's cryptocurrency. So what we are working with at the moment, again, is there's a direct relationship with an exchange, or there's an LLC in the middle, and I'll get to how that relates to storage here in a moment. But do understand that there are reasons for some of the I don't know, challenges that occur when this relationships get set up, and this is another reason why different IRA custodians have different strategies for how they offer cryptocurrency, if they do at all, and some do not. So, and then I'll also just reiterate that not all exchanges handle LLCs, and not all exchanges will provide a direct relationship with Advanta. So as we have been trying to fulfill our role and to offer a way for our account holders or potential account holders to invest in cryptocurrency, we've had discussions with exchanges. We would love to set up a direct relationship with them. They don't always understand exactly what an IRA is, that it's a little mini trust, and that we're the signers and we have custody responsibilities and things like that. And so a lot of them don't work directly with IRAs. In some cases, they have a single proprietary relationship where they will work with IRAs, with an IRA provider. So all of those things are still kind of in flux. But IRAs just going to an exchange and saying, hey, I'm going to establish an account here in the name of my IRA, that would be great. But a lot of cryptocurrency exchanges don't allow that. So do understand that that's evolving as well. And not all exchanges, so our other kind of scenario for how IRAs invest in cryptocurrency is through an LLC. Well, not all exchanges work with LLCs either. So it is a variable playing field, and this is in no small part why I spent so much time at the beginning of my part of the presentation talking about the idea that the IRA holder actually needs to match up their investment strategy with the custodian and the exchange, just to make sure that you can accomplish what it is that you want to accomplish. And I will also say that the fees charged for different IRA providers and different exchanges and things like that, they vary a lot. So I would also, in terms of encouragement for due diligence, find out what everybody's charging. Find out what your IRA custodian is charging, find out what the exchange is charging. It's remarkable how much money, how much variability there is in how much money you get charged. It's amazing to me. So all those things are things to keep in mind. Okay, so let's talk about the two scenarios that Advanta IRA has for an IRA to invest in cryptocurrency. So we've talked about some of the players in the game and that kind of thing. So let's talk about what the actual approaches that we have to offer at the moment are. So the first one is a direct relationship with the exchange. And in this case, this is not every exchange by any means. In fact, we only have one of these that's actually operating at the moment, although we've talked to several, and we would like to keep adding these exchanges as we can. But it's not a relationship that gets forged instantaneously and things like that. I do believe that will occur eventually as the industry matures, but at the moment it doesn't. All that being said, in the direct method, what happens is you have an account at Advanta, whether it's traditional, Roth, HSA, any of the account types we handle, you go to the exchange and you set up an account there, and it'll ask you if it's an IRA account, and you'll say yes. And at the exchanges that we are going to set up relationships with, what that will mean is that you as the individual will not be able to deduct money or cryptocurrency from the account without us as the custodian participating, right? So again, this is where the custody part comes in play. In this direct method, though, it's very easy and it's actually very cost effective. What you would do is you have your account with us. You say, hey, Advanta, send 10,000, 50,000, whatever the amount of money is to the exchange. I've set up an account there, and it's acknowledged as an IRA account. So we send the money to the exchange. So cash value shows up on your portal at the exchange. At that exchange, whatever it is that their method is, usually it's an online kind of dashboard, you will say, hey, I'd like for this number of dollars to be changed into this particular cryptocurrency. And usually the exchange will also be offering you one or more than one storage options so that you know where and how your cryptocurrency is going to be stored. And again, all this is very specific to the exchange. So what happens is the cash goes to the exchange. You buy, sell, trade, whatever it is you want to do within the parameters of the exchange. And then at any point when you want to move, either liquidate and move cash back to the IRA, or if you want to, at the moment, that is actually how you would take distribution. So you would actually liquidate those cryptocurrency positions, send cash back to the IRA, and then take distribution. We are and will consistently be working on different ways to distribute, to take distribution of assets. Again, we need to work on our custodial part of it, and that kind of thing. But do understand that at this point, the way that the exchange, the direct method, is set up, you can do all the trading and buying and holding and selling and all that kind of stuff on the exchange. But when those cryptocurrencies get liquidated and come back, then they come back to your IRA's cash position, at which point you can distribute them. All right. Now, the LLC way is, in some cases, much more agile, although it does have its own, kind of things to consider, right? So what's typically occurring in what we call a checkbook control scenario is that an LLC is created. It is a subset of your IRA. It's wholly owned by your IRA, and you typically will name yourself as the manager of that LLC. And because the LLC is a legal and financial entity, it can go out and create its own relationship with an exchange or exchanges in the name of the LLC. And what we hold as the custodian, we are holding your IRA's participation, your equity participation in the LLC. But at that point, the LLC can go out and it can create relationships with exchanges. It can create its own storage strategy. And so this gives you a lot more variability in terms of the number of exchanges that you can participate with and the storage options that you have. So if you're looking for agility and the ability to be in maybe multiple exchanges or to have variable kind of storage, this is really going to end up being something at the moment that is more consistent with what your goals are. So the IRA sends whatever cash you tell us to the LLC. The LLC has its own bank account. You're the manager. You, as the manager of that LLC that now has some money in it, go to an exchange. You set up an account in the name of the LLC at the exchange. Then the LLC disperses cash to the exchange, and then trades and stores and all that kind of thing according to your specifications. So do understand that this is a possibility. It does offer a lot of flexibility in terms of which cryptocurrencies you can get involved in and how your storage options can be more variable. Again, cryptocurrency availability is up to the exchange, and not all exchanges work with LLCs. So do make sure that you check that out. And as I mentioned before, this is just a variation on what I said, which is that your LLC can have relationships with multiple exchanges if need be, and your storage options can also be multiple as well. So the direct option its ability to address particular investment needs will probably evolve as we get relationships with more exchanges. But for the moment, the LLC, in a lot of cases, notwithstanding the fact that not all exchanges work with LLCs, offers a lot more agility and ability to invest in multiple cryptocurrencies and to adjust your storage as you would see fit. So I'm just going to go through a couple of these factors and then turn it back over to Alex, who's going to talk a little bit about the tax ramifications, and then we'll get into more questions. And I'll answer these two questions that have come in on the question box. So what exchange is currently approved? So do understand it's not our approval. ErisX is the exchange that we currently have a working direct relationship with. Although we're in conversations with several others, but ErisX is the one that is currently up and running. And are the exchanges insured in case of a hack or loss of crypto? Some are and some aren't. And my suspicion is that the level of insurance is different on the different exchanges. So that's a great idea for a due diligence piece when you're deciding on a particular exchange. Yes, so some of them do offer insurance and some probably don't. So, okay, so quick run through the considerations. Okay, which exchanges currently work with LLCs? That's a great question as well, and we do not keep a list of them. Again, from our standpoint, once the money goes to the LLC, then we are holding that LLC as an asset. So we actually haven't approached a ton of exchanges saying, hey, do you work with LLCs? Because it's the LLC managers that do that. So it's a great question. I wish I had the list. I just don't have a list like that. So that would be something that you would have to investigate. Okay, so we talked about buy and hold or trade. And again, this has to do with the capability of the exchange, what kind of storage you're in, and things like that. But it is a great thing to be able to enunciate when you're trying to put together your scenario for cryptocurrency investing. What currencies are available and which exchange, right? So we talked about that, multiple exchanges. The exchanges are the entity that decides what cryptocurrencies are available. How fast can you buy or sell? What's the process? I'll just tell you, some of them are very quick, almost instantaneous, and some of them are not, especially when it comes to IRAs. So when you talk to an exchange about their capability, that is something that they can talk about usually, and they'll talk about it in terms of their personal account. But because of the IRA custodian's responsibility for custody, sometimes if you want to trade within your IRA, the IRA custodian has to be involved. So in some cases, that means that you have to do it during their business hours. I've heard of scenarios where you have to be on a Zoom call with everybody to get the appropriate permissions. There are all kinds of permutations for that. So do understand that you want to investigate these questions of how fast can I buy and sell, and what's that process, especially if your scenario is not a buy and hold one. When can you buy and sell? Again, in some scenarios, the way that this all gets set up, whether it's the exchange or the IRA custodian, sometimes you don't have the ability to buy and sell during certain hours of operation. So it's a good thing to investigate. What kind of technology do you need? If any of you have set up an account in exchange, you understand how much identity verification you have to do to get your account open. It's a good bit. So you do have to have some technological capability to do that. And then again, if the mechanism for trading requires a particular laptop speed or computer speed, or you have to have video conferencing, I mean, any number of these things are possible. They're not, some of the exotic ones are not real common, but they do exist out there. So I'm just proposing these questions in terms of, hey, these are things that you might as well ask and get out of the way at the beginning so that you don't get jammed up later on. Can you move from one exchange to another? This is always partially a custody question. Of course, the LLC scenario, the checkbook control LLC scenario that we have a lot of our cryptocurrency investors use, that really has to do with the way that the LLC participates. So yes, you can. It just kind of depends on how you set it up and your bookkeeping for it. Storage type, again, Alex talked about the broad categorization. The question earlier was about insurance. I think that that's a key part of the storage as well. So your asset protection, how is it stored? Is it insured? What's the worst case scenario, et cetera, et cetera. And then costs and fees. And I would say that from a categorized perspective, think about it. The custodian is going to have some fees for their participation. The exchange is going to have some fees for their participation. The storage may or may not cost extra in terms of the exchange if the storage is at the exchange. And if you're going to do storage outside the exchange, there's going to be some cost for that too. So all of these are really just, a non-comprehensive but hopefully helpful list of things that you might want to answer for yourself as you set up your scenario for cryptocurrency investing. And again, as an investor myself, I can tell you that it does take a little bit of time and patience sometimes to get this set up properly. So you might want to budget a little bit of time to go ahead and get these things kind of lined up the way you want them. So I think that that's going to be it for me for the moment. Alex, let's go ahead and talk about some of the tax benefits. What do you say?
I think that is fantastic. So people, a few of the guarantees in life, one of them being death, the other one is taxes. We will follow the second one today. Cryptocurrency and taxes. For the beginning of cryptocurrencies kind of adoption into the marketplace, there was some pretty favorable, or I should say pretty favorable lack of tax regulation on it. But up in 2018, the hammer kind of fell with the first big chunk of regulation coming in the face of accounting principles that were levied by the IRS for the buy, sell, and exchange of cryptocurrency. So before 2018, if you bought cryptocurrency, you could essentially trade cryptocurrency for other cryptocurrency. So I could use Bitcoin to buy Ethereum or Dogecoin, and I wouldn't have to pay any taxes on that exchange. Even if my Bitcoin was, at a fiat exchange worth more than the Ethereum or something else that I was buying, I wouldn't have to pay any taxes on that. Or if I was trading up and what I was trading was valued less than what I was trading into, none of those things were essentially treated as taxable, which is all just like-kind exchange. But after 2018, we have regulations coming in and requiring tax lot accounting. Now, for any people that have done personal securities trading, you are probably at least tangentially familiar with what tax lot accounting is. What that means is that when you buy or sell something, in this case, a cryptocurrency, you have to track your basis versus your gain or loss in that particular transaction. So for a security, let's say you bought Apple at $100 per share and you sold Apple for $200 per share. Well, you would have $100 of gain on each share of that stock that you sold. Same exact thing applies for cryptocurrency. So in this case, if you're Bitcoin and you wanted to purchase something else, in this case, Ethereum, before you wouldn't have to worry about any of that tax lot accounting. But now, even if you're doing a like-kind exchange, you have to treat it as if though you had liquidated your asset. So if you bought Bitcoin for, let's say, $10,000 per coin, and Bitcoin is currently trading on the date that you exchanged it for another cryptocurrency at $20,000 per coin, you would have to claim a $10,000 per tax lot gain on that exchange. And same thing would go if you exchanged it for fiat currency, US dollars as well. Now, this seems relatively in line with securities, but when you extrapolate this into the world of cryptocurrency, when the volume of trading is exponentially higher in most cases than what you are looking at with regard to other types of assets, you can see where this, one, the type of accounting is just incredibly cumbersome, and two, the amount of taxes that you might have to pay are pretty crazy as well. You're going to be getting a lot of things are going to be calculated as short-term capital gains, which unfortunately are going to be taxed at ordinary income rates, which is really what people are trying to avoid. So you have to keep track of all these things if you're doing it personal. So profits and losses are going to have to be tracked through tax lot accounting, which is incredibly cumbersome and can be quite amount of volume if you're doing a good amount of crypto trading. And then if you're holding for a long time, you do get to take advantage of long-term capital gains. But with the volatility of these markets, most people aren't holding a particular crypto for over a year. Many people do. It depends on the crypto that you're holding. A lot of people are a lot more long-term on things like Bitcoin, but if you're investing in more altcoins or some of the newer offerings, use Dogecoin for an example, you might have quite a high volume of trading on that to try to take advantage of maybe an arbitrage in price difference on exchanges or just a price differential on that day or hour in the market. So you could potentially have a lot of accounting that you have to do at the end of the year for your cryptocurrency if you're doing it personally. This is really where IRAs and tax advantage accounts shine extremely brightly, because you can buy and sell to your heart's content on an exchange underneath of an IRA, and you don't have to worry about tax lot accounting. None of these things are going to be passed through to you personally. All of it is going to be non-taxable for the trading that you're doing. And the nice thing is that it doesn't matter if it's a traditional tax deferred account. It doesn't matter if it's a Roth account, a solo 401k, a SEP, a health savings account, an education savings account. All of these types of tax advantage accounts are treated the same for the taxation of the exchanges and the buying and selling of assets underneath of that account. You only have to worry about taxation with regards to the distributions when you take money out of that account. It doesn't matter if it's pre or post-tax money. All of the trades that you would do underneath of an IRA are completely tax exempt. So you don't have to worry about the cumbersome tax reporting. You don't have to worry about calculating short or long-term capital gains or losses or gains over a year. It's simply buy, sell, and trade, make money, and don't have to worry about taxes on those particular trades that you're making. So utilizing an IRA, especially after 2018, before it was a good idea. Now for this stuff, it is something that should be taking, kind of a front seat approach to your strategy in investing in cryptocurrency. If you can do it through a tax advantaged account, the benefits are becoming extremely pronounced with regards to that. And just keep in mind that if you are younger, that any and all of the profits, one of the kind of downsides to it, do have to stay in the account until you're 59 and a half in order to be able to take those distributions without any 10% excise tax penalties. So do keep that in mind. Okay, I see someone has their hand raised, so if you do have a question, make sure you type that in. So now we're going to do a case study. So in this case study, we're going to be looking at Rachel's investment into cryptocurrency, and we're going to break it down on the following page as to what it would look like if she did this personally or if she did it through an IRA. So Rachel wants to use some of her old 401k from a previous employer to purchase cryptocurrency. So she has pre-tax money she wants to use to buy cryptocurrency in an IRA. So what exactly does she need to do? If she wants to use an IRA, here's how it kind of breaks down. She needs to open up an IRA account with Advanta. She requests the direct rollover from the old 401k. She then determines how she wants to buy the cryptocurrency. So what Clay was going through was, you can utilize an LLC structure. You can buy cryptocurrency directly through an IRA at an exchange. She determines which one's going to be a better fit, and then she decides which way to go. She works with her account manager directly to kind of get that all in place, and then ultimately fund the LLC or the exchange directly. Now on our side, we work with the client to have the funds invested in the preferred manner. So that's getting them all the paperwork correctly done, signing any documentation, whether that is a exchange agreement, whether that is an operating agreement for an LLC. We'll get all that figured out and get it in place so that it can be correctly done and record kept so that the tax advantages are maintained. Then we wire the funds to the purchase, and then we hold the records of the exchange funding. So making sure that we show that they have an account with X amount of value at, let's say, ErisX, for example, that Clay mentioned, or that their LLC membership is properly record kept and unitized and held within the IRA as well. So that's kind of how it breaks down for who does what if you're looking to do an IRA investment. It's really not that hard to do. It's really quite simple, but the big benefit is going to be really pronounced when you look at taxation. So I'm going to break it down here for Rachel's income tax potential impacts with regard to this. Again, these are just round numbers and assumptions. We're not going to necessarily, this is definitely not tax advice or anything that you should use to extrapolate to you personally, but just kind of gives a good example. Let's see, Roger, yes, it will be recorded. So the invested amount is $100,000. She makes 80 trades in 1 year, which, really potentially is not that many when you talk about the individual units that you are purchasing when you're calculating tax lots. So, in both cases, whether it's $100,000 invested personally or taxable, 80 trades in a year, and she did pretty well. She made 20% on her 100,000. So she has a $20,000 gain that she has to look at as calculated as a short-term capital gain, which is just calculated as ordinary income for her personal taxes, but she doesn't have to worry about any of that for her IRA. Now, her annual household income before the investments we're just going to say, is $170,000. So that's going to put her at a 32% tax bracket. At 32% of that $20,000 is $6,400. Again, she might have other deductions or anything or losses that help offset that. But assuming in a perfect scenario this holds true, out of that $20,000, she would only take home $13,600 of her $20,000 profit if she did it personally. Whereas with the IRA, you get to keep the whole $20,000 within that account. And the big part is the compounding interest effect. So not only does she get to keep that whole $20,000 within that IRA, but then she gets to turn around and invest $120,000 as opposed to only being able to turn around and invest $113,600. So she potentially gets to make more money at a faster rate without having to pay taxes in the IRA. Whereas with the personal investment, she's going to have to pay the government every year for those investment returns, and would have less money to accrue compounded interest effects on in that regard. So it's just kind of a good way to look at it with regard to the actual benefit. Paying the government $6,400 just for some cryptocurrency trades is quite a bit of money. It's 32% is more as a ratio than she made on her underlying basis. So it's definitely something to keep in mind. Now, if you're interested in getting started, this is pretty much just kind of wrapping it up. Give Claire or myself a call. We are more than happy to help you out with getting an account established to do this or any other type of self-directed investing. Only takes about 15 minutes. We get you set up with your own dedicated account manager who can help you through every step of the process. We'll help you through getting contributions made to your account. Remember, it does have to be made in fiat US dollar currency if you're making a contribution. You can transfer funds from another IRA or directly roll over, and then your account manager will help you right from there with getting started investing. This whole thing, from start to finish can take as little as about 5 to 7 business days, and we can get you started and on your path to getting some great tax advantaged investments done, whether it be through crypto or any of the other types of offerings that our clients invest in. Again, feel free to reach out to us directly. My direct line is up on there as well as Clay's. I'm located in Florida. If you're in the Tampa Bay area, I'm happy to sit down and meet with you. My colleague Clay is in our Atlanta office, so if you're local to the Atlanta metro area, he'd love to sit down and meet with you as well. Again, I do see that we have a hand raised. If you do have any questions, type them in now. We will stick it out for another few minutes while we still have people on the call. And once we do have a number of people drop off, we'll go ahead and end it as well. The handouts are attached, so all of the slides, if you'd like a copy, are attached as a PDF right here. So go ahead and grab those before you leave if you'd like them. This will be recorded and on our YouTube channel. So if you'd like to go back, if you missed a part of it, I know a few people did, you can go back to our YouTube probably about tomorrow midday, and you can review the recording there as well. So with that said, we are done with it. Please do type in any questions that you have. I want to thank my colleague Clay for being a part of this today. I always enjoy having partners on these webinars. It makes it a little bit more interesting, and I hope the content was received well and was of benefit to everyone that attended today. Let's see. So Walter has a question. Can you comment more on storage options? Sure. So your options are kind of threefold. You can either store your cryptocurrency is what's typically referred to as a hot wallet, meaning that you just leave it on the exchange. If you buy the cryptocurrency and you log into your ErisX or your Coinbase account and you see your cryptocurrency right there in your account, that's what's referred to as a hot wallet. You have it right there. You don't have to move it around or anything. It is generally kind of considered the least secure method of doing it, because if someone compromises your personal passwords to your, let's say, Coinbase account, if they can get into that account, boom, your cryptocurrency can be gone in a blink of an eye. It can be across the world, no way to recover it. So it's generally perceived as kind of the least secure option. Most cryptocurrency platforms have a pretty robust interface. Most of them will allow you to set up two-factor authentication, where you get something like a text message and a code to log on. So cryptocurrency exchanges are not as insecure as some people might think. But again, with how sophisticated hackers and people that are doing social engineering and are trying, cyber criminals are getting, definitely the least secure of all the options. Secondarily, you have an online cold storage where you move it off the exchange, but to another online service provider that will provide you a separate login for you to store your cryptocurrency online. Then generally perceived as the most secure would be an offline cold storage, where you move it all the way off the internet onto a dedicated piece of hardware that is completely air-gapped, not connected to the internet, doesn't have its own power source, and stored that way. Keep in mind that if you want to exchange something, you would need to log into your exchange platform. You would need to boot up your storage device and then send your cryptocurrency back to the blockchain to your online hot storage wallet, and then exchange it on that platform. And by doing that, you do have to go through the blockchain. There would be a fee associated with that. Blockchains have fees for moving cryptocurrency through them, so you would lose a minimal amount, but you would have to kind of pay for that. So just different levels of security have different fees that you'd have to consider with that. But those are the three main types of cryptocurrency storage. Again, there are different nuances to everything, and we could probably go through a whole presentation hour of going through every single different type of storage option that you have. But with that said, that's kind of the quick and easy of the storage options.
Alex, I was just going to add that I was doing a little research the other day about this as well, for a financial advisor, and some of the online storage that's still online cold is they're also limited in the cryptocurrencies that they'll handle. So as we talked about, all the things that you kind of have to match up as an investor, if you want to do that style of storage, make sure that they make sure that the storage provider handles the cryptocurrencies that you want to invest in. So another match to look for.
Yeah, and that goes with any option besides the exchange platform that you purchased on. Whether it's offline cold storage or online cold storage, they have to be compatible with that cryptocurrency. There's really no kind of one size fits all for cryptocurrency storage. Although I use the term, kind of a vault or a floor safe, where you could literally store anything personally that you wanted, you have to have something compatible with the cryptocurrency that you're looking for to be able to hold. So keep that in mind, is that if you're going for some of the big ones like Bitcoin, Ethereum, Monero, Bitcoin Cash, Ripple, those are pretty much supported by everyone. The cryptocurrency storage option providers wouldn't have any type of business reason for not accepting those. But the code for one that's much less utilized and has less volume, there's definitely a case to be made for not supporting that. So again, if anyone has any questions, go ahead and type those in. People are starting to drop off, so if you want to get one in, please do ask the question. Otherwise, we will be getting logged off here in a second. Gerardo, please type in the question and we will get that answered. And for people still on, we are just waiting. There's a gentleman asking has a longer question, so that's why we're hanging off for a second. Now let's see. Shalitha asks, can you please cover the LLC structure again? I'll let Clay take that one.
Sure. So the structure is basically this. The IRA holder, with the help of professionals or friends or however, is going to affect the creation of an LLC. It's usually an LLC. It can be other entities, but LLC is far and away the most common. It's usually an LLC that is opened and created just for this particular purpose. And so that LLC is then going to be funded. In other words, the IRA is going to purchase 100% equity share of that LLC. And this is the garden variety setup. Usually they're going to buy that 100% share for whatever money it is that they want to move into the LLC. So you create the operating agreement. It says this amount of money is going to be brought in from the IRA. The IRA is going to be the only owner. It's typically in this scenario, single member LLC. So one owner, 100% owned. The IRA custodian, us, we at your direction disperse a check to the LLC, and that constitutes the acquisition of your IRA of that LLC, 100% ownership of the LLC. And then at the same kind of time, the LLC is created in such a way that the manager, not a managing member, but the manager is the account holder. So the net effect of that is that the account holder has in one hand the state document saying that they're the manager of this legal entity, which is an LLC, and in the other hand has a check of IRA money that's made out to the LLC. So the account holder goes down to their bank, they open a business checking account with those funds, and then as the manager of that LLC, you're ready to write checks on that IRA money. So hence the term checkbook control. But that's the general scenario. So you're creating a legal entity that has IRA money that is essentially a wholly owned subsidiary, for lack of a better way to put it, of your IRA. And then because an LLC is a legal entity, it can go out and establish relationships with cryptocurrency exchanges or even brokerage houses. It can buy real estate, gold, any of the things that are allowable by law. So that's the general sketch of the way that the LLC gets created. And the reason that it has a little bit more autonomy is because it had what we are custodying as the IRA custodian is the equity participation in the LLC. The LLC itself can then go out and operate in the investment world.
Thank you. Let's see. Jim asked, does Coinbase Pro accept an LLC with an IRA application? I recommend everyone, if you want to do anything other than just personally invest, Coinbase is not a great option. If you want to use an LLC somewhere like Gemini and Binance, all work well with LLC investors. James, give us a call. We can certainly help you out with that conversion question. And Gerardo got his question typed in, so let's read that. One moment. Let's see. With regard to your question, Gerardo, you kind of hit on all of them. There's really, I wouldn't say there's a magic exchange with regard to what you're asking of one that has, relatively easy interface with regard to KYC regulations and low fees. I would say that you kind of hit the points on the ones that I've looked at, but in general, cryptocurrency investments through exchanges are a bit cumbersome. It's something kind of endemic to the marketplace. I unfortunately don't have a recommendation to, looking at places such as Binance, Kraken, Gemini. If you've gone to those places, I don't think necessarily going to a more niche or boutique place would be any more beneficial than not. If you haven't tried ErisX, they seem to be pretty easy to deal with for our clients. And also BlockFi is another one. They're a very large one, but some people, have had good experiences and not with regard to kind of that front end aspect of it. But I would recommend, if you haven't tried, ErisX seems to be pretty easy to deal with for our client basis, and then also maybe give BlockFi a shot if you haven't as well. With regard to using international exchanges, potentially yes. It just depends on where the cash account is held. Doing it directly through the IRA may not be a feasible option. You might need to use the LLC option to invest in that, like Clay was indicating. So can you do it? Yes, potentially, but you might need to do it in a certain structure that would facilitate being able to do that. So, yep, I think that kind of runs our time out. I want to say thank you very much, everyone, for attending today. Clay, do you have any last thoughts or something that you want to chime in on?
No, other than to just say, this presentation was designed to give everybody a little bit of a basis from which to work. But both Alex and I are happy to have individual one-on-one conversations with you about what you're trying to accomplish and what we've seen, and to be as much help as we can. So please do reach out to us. We're happy to talk to you.
Absolutely. Well, Clay, again, thank you very much for taking the time to do this with me today. I think everyone got some good value out of it. And with that said, we'll let everyone get back to their day. Thank you very much. Have a good one.